Welcome back. So very, very flat on the Nifty right now. The gain is only about 11 points. Mid-caps continue to do relatively better, with the bank Nifty trying to fight back despite the huge sort of downward draft that Kotak Mahindra Bank is lending today. Thanks to some performance, say, from an ICICI Bank, the Nifty Bank is trying to hold its head above water. Well, we're going to stick with earnings now because a lot of stocks beyond the index, beyond the Nifty 50, are actually buzzing on the back of interesting quarterly numbers. So we have the hits and the misses lined up for you. Ekta and Sonal from the team are standing by. Let's start with the big hits, the positives first, Ekta. Which stocks do you have on your radar?
Thanks for that. Well, I'm going to start with one stock which is showing double-digit moves on the upside, which is Aarti Drugs. The margins have sustained above 12% for the second consecutive quarter. The growth has been led by the API as well as the formulation business. Separately, the company has also approved a buyback of around 59.8 crores. So totally, the revenue is up around 6% EBITDA has come in at around 84 crores. Margins have improved to 12.7% versus 10.8% year-on-year and versus 12.6% Q-on-Q. And profit at around 47.86 crores versus 35 crores year-on-year. Titagarh, it is a spate of strong results which continues for that particular stock. There is execution of the order book and margin expansion as well. In any case, the stock has run up quite significantly this year. So revenue was up around 111% on a year-on-year basis. EBITDA up 164% year-on-year. Margins close to 12% versus 9.3%. And profit up around 180% on a year-on-year basis. CreditAccess Grameen. Gross NPA has improved on a Q-on-Q basis. NII is up around 19.2% year-on-year. Net interest margin at a multi-year high of around 13% versus 12.2% Q-on-Q. And the profit is up around 86% on a year-on-year basis to close to 300 crores.
Okay, thank you very much for that. That's the big winner. Let's go across to Sonal now to take us through the earnings misses. Sonal.
Thank you for that. Well, starting with IGL, it is seeing a big decline today because it was a volume miss in this quarter. Overall revenues were down 7.5%. EBITDA was up 38%. Margins also expanded as estimated because of lower gas costs, but they were also slightly lower than what the street was working with. PAT was up 33%. Now, as I said, total volumes came in at 8.2 MMSCMD, which compares with a poll of 8.4 MMSCMD. It is actually a flattish performance on a quarter-on-quarter basis. There was an expectation of an increase. EBITDA per SCM has come in at 8.6, which is in line with estimates. Jeffrey says that volumes fell on a quarter-on-quarter basis and they were 2% below the Jeffrey's estimates. CLSA says that volume growth was the lowest they've seen in many years, and volume is a big trigger for the company, so a disappointment here is what the street is not liking. For AU Small Finance Bank, net interest margin has come in at a 9-quarter low of 5.7%. Operating profits are down 4.4% on a sequential basis. Even in their asset quality, slippages are higher on a quarter-on-quarter basis. Slippage ratio has come in at 2.02% versus 1.3%, and gross NPA has increased and so has net NPA on a quarter-on-quarter basis. So that stock is on our radar. Tejas Networks, it was another weak quarter for the company. While their revenues were down 37% sequentially, it was a growth on a YOY basis to the tune of 46%. Quarter-on-quarter decline came in due to transition to EMS facilities, and EBITDA loss expanded again for the company to 46 crore rupees versus 8 crores on a sequential basis. They reported a loss again to the tune of 26 crore rupees. Now, losses have increased this time around due to an ESOP charge of 31 crore rupees, continued investments in R&D as well, and increased component costs to expedite fees and spot buys to ensure critical customer shipments. So that is something which has hit their raw material costs as well, and that's why a big loss this time around.
Got that. IGL down 5% now. Tejas is also down almost 4.5%.
You know, Tejas had just last week hit its all-time high, or a 52-week high of 893,
so
right?
No scope for disappointment.
No
or
scope
error.
for disappointment. And she used one word about why the revenues are down on a quarter-on-quarter basis so significantly. And they said because of an EMS transition. It basically means that one of its manufacturing partners, EMS partners, shifted their facility. So it came in as a bit of a surprise, and therefore what they were anticipating from that EMS partner by way of supplies, etc., didn't come through, which is why that quarter-on-quarter decline has come through for the revenues.
Okay, so that could explain it. Thank you very much, Sonal, as well as Ekta, for joining in and helping us go through some of these interesting reactions, both on the upside and the downside. In fact, earnings will be the focus on our special digital offering, Who Moved the Market, as well. But not mid-caps. We're sticking to the big boys from the banking sector. Kotak Mahindra Bank and ICICI Bank, two big banks in focus. The earnings came through. Why is Kotak reacting negatively? Down 3.5%. ICICI is relatively better off. So Abhishek will join me, and we go live on YouTube at 2 p.m. So do tune in. Who Moved the Market?